everyone, Jenner here, slingshotfutures.com, and welcome to the daily market outlook for futures and Forex. This is where we take a look at our big six markets, in this case, futures being gold, crude oil, and the Dow, and Forex being the euro, the pound, and the yen, and we formulate an attack method for trading tomorrow so we can be as prepared as possible for the price action that we see tomorrow. Now, first of all, right off on the bat, we see today as a fairly slow day across the board. There's a lot of wide movement, and we did have a lot of big moves. But really, zooming out, we didn't get very far. Gold is a good example of a fairly decent day, right? We opened up here, and we're closing right around here for right now. So it's a fairly heavy bearish day. Looks something along the lines of this, but it also kind of just looks like it found a balance, right? There's the same amount of wick on the bottom and the top, or at least close, and the bulk of the movement just kind of happened in the middle. So it is a fairly bearish day overall on gold, but all things considered, you know, with all of this big movement, we didn't really get that far. Now, the overall momentum that we have is obviously downside biased, right? Nice bear move working its way lower. But the one thing that kind of stands out here is that the channel was working really nicely inside here, and then we formed this tighter one that broke that larger channel down. Now, typically when you have these big channels like this and it breaks down, you expect to see it try twice, because that's the sellers essentially giving the breakout. They get the breakout move, they sell the pullback, and they take their profit at the lows. Now, generally, this is where it's a decision point. They have that big push down in the breakout, they sell the retrace, they make the new low, everybody starts taking their profit. Now, what do they want to do here? And this is where the reaction becomes very important. We have a strong run higher here at the very end of the day, and that's showing that the sellers obviously took profit here pretty aggressively, so much so that we may have to wait until the market gets a little further up before we start jumping into more sell-side action. Now, we are testing the base of that earlier channel, and this is a location that's very commonly used. You break out of a channel, you come back to it, test it as resistance, and then slam back down again. Now, are we going to slam right back down to a new low? That's a lot of bullish pressure working its way higher. I would rather see the sellers try it twice before going back down. But either way, the sellers still will look for some conviction, and you're probably going to get a bounce here, maybe 10 to 20 ticks, before it starts trying to decide what it wants to do. The one thing that really stands out to me, though, is how much bullish pressure is here. I would be very careful selling in the face of that amount of bullish run. Now, one area that may become a magnet and draw price to it would be 1210. Suck the price back up towards the top of where they broke out in the first place and see if the sellers want to defend it there. If they do want to defend it, then you're likely going to see that push back down to at least an attempted new low. If they don't and they break above it, then you're starting to think possible support in that area for another run back up. So kind of a double-edged sword. It all depends on how gold wants to react in this location. Over on crude oil, relatively range-bound once again. We started the day off with a slow grind higher. They peaked out and then took a big slam lower. Now that big drop, that happened between 5 to 6:30 or so. And after that move down, it went all the way back up again. So we're forming this very range-bound sentiment where we have a new high, a new low, back into a new high, and this high stuck around for a little while. We had a nice push up, pull back, push up, pull back, push up, pull back, and then we started peaking out for a kind of an off-kilter double top up here, given the bearish response. Now, the bearish response that we're seeing here shows us that the sellers are obviously attempting to come in. Not only are the buyers that have been buying in all the way down here, down here, down here, even here, they took profit off at this high. But along with that, they also sold it, right? New sellers came into the market, causing the market to drive down, and likely they came in on the prior high of day. Now that we've slammed down so aggressively, you get a retrace back up, and with that amount of aggression, sellers are probably going to try to come in again, and they did. Now we're finding a little bit of balance in the earlier area of support. This is where we found overnight resistance. They broke out above it. They found support. They broke out above it again. Nothing really here, a little bit of resistance. But when they finally pop back up, they found support once again, and guess where we are? We're right back in here. So as long as we stay above this area and they are unable to get underneath 52.99, or if they do, it's very short-lived, we'd be looking for a correction up. Not a huge amount, given this bearishness is pending. We're probably going to get a high of maybe half the distance of the earlier high. So you're looking for a high of something like that. But even a full distance would put an objective at around 53.30. So you're looking for a bounce around this area up to 53.30 before the market decides really what it wants to do. If it begins breaking down, same thing that we've seen earlier several times, is come back for resistance and finish the move back off to support between 52.77 and 67. So again, another double-edged sword. At the moment, I would rather be a buyer, but in the bigger picture, we're range-bound, we're falling off of the highs. I would almost rather be a seller looking for those lows. So all depends on what the buyers or the sellers want to do here on crude. Over on the Dow, big move up. That might just be the understatement of the day. Very large bullish momentum to the upside. The buyers were all over the Dow. They didn't stop. The issue is they didn't start really taking off until around 11 o'clock, so it didn't really kick off until the afternoon. Most of the traders, or at least the way that we trade, we're done most of the time in the morning. So a lot of this movement, unless you're trading in the afternoon, you may not have caught. Now, that being said, this bullish momentum to the upside, we're obviously looking for buyers to want to buy a pullback. The problem is, buyers don't want to buy way up here. They don't want to buy here. They arguably didn't even want to buy here, given the reaction at the top. So what I'm looking for is for them to pull back a little bit further. I want to see them come back to last week's high, last week's open. We also have a major level of support at 19,827. See if we can get a bounce area in there, then try to go back to the highs. Now, because we found so much failure at the top, we may not be able to make it all the way to a new high, but we do have this nice juicy monthly open level right at 19,863, and that could be a nice little magnet for a pop higher to finish the move off to the top side, and if they break through, then that's just icing on the cake. If they decide they want to pull back a little bit further, the next major support area is at 19,799. That's the point where they broke out earlier of congestion, and they're likely going to want to come back and retest that once again if they break through this 827 area. So the 827 area is the first line in the sand that I'm looking for to buy back up, and if it does end up cracking through that, then we're looking at 19,799. Over on the Forex pairs, looking at the euro, range bound, obviously, very, very range bound, fading off of the highs. They tried making another high up here. They missed it, made a lower high, and continued their descent. Now, when they found that move lower, they got a big pop up at around 6 o'clock or so, back up to that new high. They finally got the new high up here, but as soon as it did, look at that wick at the top, everybody sold it when it hit there. So all of the buyers that were in this, they probably bought here, bought here, bought here, bought on the way down, assuming that this move lower was at least going to find support at the low of the range anyway, and push back up, and everybody exited at the highs, and that caused a drastic sell-off down right back into that support area again. So we have last week's high at 71.91. We also have the major area of inventory between 72.34 to 72.02, and that level has been respected several times in the past, so something to definitely keep an eye on. We're cycling off of that level. We have a very strong bullish move. We may just have a little bit of a grind here, something like this. Now, chances are, if you get a move like this, what you would really want to see is for them to break out, test the base of that area, and then catch a buy opportunity right back up to shove the market further higher. Now, that's kind of the scenario that I'm looking for. I definitely want to be a buyer here, but maybe not this high. If at all possible, I would rather buy a deeper pullback, especially if they can come back to that 72.34 to 72.02 area. That would be really nice. They might not be able to pull back that far, though. Over on the pound, now the pound, this kind of goes really for all the currencies. They're mostly range bound, right? We have another day of range on the pound, but it's a little bit wider. We had a big announcement earlier this morning, some news that came out and caused quite a bit of whip back and forth. But really, all that managed to do is just get the breakdown of the range before the buyers tried to come back up. Now, one big clue that we have here, this is the overall high. And you notice a little problem here? They missed that high, and that's a really big clue. So even though we are holding a massive area of support, massive inventory support here, 24,995 to 078, looking for the buyers to run back up, With this miss on the highs, that makes me a little bit nervous to go all the way through the high because we might not make it. So instead, a more likely objective would be around 25.30, playing it slightly more conservatively. And then with the excess contracts or shares, or in this case, dollars, you'd be looking for a little more follow through the top side. So really nice pullback, slight exhaustion at the end where it tried going down, grinding, then boom, and then immediately came right back up again. That's a sign that the sellers are giving up in a major area of inventory. Notice how many times this area has been respected. Hard to ignore, and the fact that it's showing it again tells us that we may be looking for another bounce back to the upside. So looking to be a buyer on pound right around here, honestly. Over on the yen, nice bullish run higher, but a little bit of overzealousness. We had this move up, and arguably it was even a little more aggressive earlier in the morning session. When we started breaking down, the sellers tried to take over, and they failed, and massive run higher, big old run higher at 10 o'clock, and then we got, it's just, all hands on deck racing to the highs. So with this bullish momentum to the upside, we're looking for a possible channel, right? Draw the lows of the channel, transpose it to the highs, and see what they do around that location. They hit the area, immediate selling pressure. Then they try breaking above it, they use it as support, they test it once more, form a double top, slight maybe higher high, not by much, and now we're going into a range. So chances are, because of all of that's happened so far, we're more likely to go into a range or a pullback mode before the buyers come back in and want to jump in. So what I'm looking for is a pullback down to 113.502 to 442, and then look for the buyers to attempt to go back higher. Same situation though, they already have blown off through the highs, and that might be most of the juice in the tank that the buyers had. So I'm not looking for a new high. If it does, that's awesome, because we still have those gap levels above. Major target at 114.009 in that area, as well as the major gap fill at 114.569. But being that we're so overdone, the buyers, before something like that happens, may need to see a deeper pullback to get it going. So if that is the case, looking to buy in this area, possible resistance, looking for the initial target, and then maybe further to fill that weekend gap. So overall, that's going to do it. Make sure when you're trading, especially tomorrow, there is some news announcements. We do have crude oil inventories tomorrow. Along with that, we have some news coming out for the euro. We also have some British pound news with Governor Carney speaking. So there are some announcements tomorrow that may keep the markets moving. So just be careful. And as we always say, make that plan, trade the plan, follow those rules, and you will be A-OK. Until tomorrow, have a good one.